All right, good morning, everyone, or afternoon, wherever you are. It is Monday, January 27, 2025. Hope you're doing great. And got an interesting topic to cover today. By the way, markets are selling off. Let's go to our homepage here and take a look. Big sell-off in the NASDAQ today, 609 points, down over 3%. Dow is slightly up, Dow 30. So, that really shows the extent to which the NASDAQ is tech heavy, because a lot of the tech sector is selling off because of this China's DeepSeek AI, which we will get into today. But it's interesting, it almost seems like these Dow 30 stocks, the biggest of the blue chip stocks, are kind of a safe haven right now. Looks like a lot of buying activity, a lot of money flowing in that direction. Oil off slightly today, silver down, Bitcoin down, gold down, like everything is just really taking it on the chin. So, that is how this goes. The market goes up and down. Of course, we are fond of the up days, not so fond of the down days, but they can be a terrific buying opportunity. And that's how I'm looking at today is I think, let me show you. I asked Finley, have you all been using Finley? I hope you have. Great source of information, especially if you have stocks in your portfolio already. Finley is super helpful. Like this morning, I asked which technology stocks are overvalued. Finley did a deep dive into the financial metrics for my technology stocks within my portfolio, and then gave detailed data here, listing them the highest with the North Star rankings, and the portfolio. The PA group means the portfolio assistant, and where those are found within our assistant. So the majority, as you can see, stocks that I've got are in the growth sector, heavy technology. So there are. I think Finley's fantastic. Take a look. So my question to Finley earlier is, how is China's DeepSeek going to affect US AI companies? Because that's really the narrative around why the sell-off today. The market is always looking at excuses to go up or down. The money is made in the volatility. If we had a market that just moves sideways all the time, there'd be very little money to be made in this market. Excuse me. So the market's really looking for a catalyst to move down or up. Last week was a big week in AI. The stocks performed very well in the US markets, especially on the NASDAQ. And now we see an absolute reversal. So gives a great excuse to take some profit, right? But don't panic. That's really well. Let's dive in, and I'll give you my best recommendations for how to handle this situation. So here's Finley. The rise of China's DeepSeek initiative is poised to have a significant impact on US AI companies, which I find this very interesting that this just came, quote unquote, out of the blue, just announced early this morning, right, about this DeepSeek situation. Nevertheless, let me keep going. Becoming a catalyst for increased competitiveness within the global AI landscape. Here is the issue. Their claim is that their technology, their AI technology, is better than ours, and it'll be way cheaper. But the reality is, it's not a fully baked cake yet. They're just putting this thing together. They're just floating it out in the news today, but it is by no means fully ready to go. All right, let's keep going. DeepSeek, representing China's strategic investment and technological advancement in AI, serves as both a challenge and a motivator for U.S. entities in this domain. The key implications for U.S. AI companies revolve around innovation acceleration, talent acquisition, and policy advocacy. Now, I also find this very interesting that it comes on the heels of Trump announcing his $500 billion AI initiative. Don't you? I find this very fascinating. All of it's fascinating, actually. what would life be like with all this, without all this fascinating information to get through on a daily basis? You know, we'd be so bored if none of this was going on. Okay. Firstly, the pressure to innovate is likely to increase, pushing U.S. firms to prioritize research and development to maintain a competitive edge. This entails not only enhancing existing AI technologies, but also pioneering new groundbreaking solutions that cater to emerging market needs. U.S. companies could leverage their established innovation ecosystems driven by collaboration between startups, academia, and industry leaders to remain at the forefront. And then it speaks to talent, finding talent, retaining talent. Additionally, as China fortifies its position, U.S. companies could find themselves advocating for favorable policies that promote an equitable competitive landscape. So that's, that statement right there, that really rang true to me, because I'm thinking, the foreign countries are under pressure with this tariff talk, right? This situation. They need a little leverage. And I'm wondering if this isn't the China leverage tool that they're going to play at this moment. I don't know, just thinking out loud. What do you all think? Tell me in the comments on this video. This might also involve engaging with government entities to ensure a robust IP protections and fostering cross-border collaborations where beneficial. Exactly. Finally, the presence of a formidable competitor such as DeepSeek may propel U.S. companies to implement concentrated portfolio strategies, focusing intensely on their core strengths in areas with the highest potential for growth. Concentrating resources on these high-impact areas will be crucial in achieving sustained success amid the dynamic global AI environment. I agree with that. But I think U.S. companies are already doing that. They're constantly saying how much they're putting Meta, all of them, like how much they're investing into AI initiative. Overall, while DeepSeek presents challenges, it also opens up opportunities for U.S. companies to accelerate, innovate, all that good stuff. It is an evolving scenario, underscores the need of agility and strategic alignment navigating multifaceted AI landscape. So if we head over to Yahoo Finance and look at this article from Bloomberg, what is China's DeepSeek and why is it freaking out the AI world? I mean, here's their best take on it. An AI startup that's just over a year old has stirred awe and consternation in Silicon Valley after demonstrating breakthrough AI models that offer comparable performance to the world's best chatbots at seemingly a fraction of the cost. So here you go. Emergence may offer a counterpoint to the widespread belief that future of AI will require ever-increasing amounts of power and energy to develop. Global technology stocks tumbled in late January as hype around DeepSeek's innovation snowballed, and investors began to digest the implications for the US-based rivals and their hardware suppliers. Founded in 2023 by this person here, the chief of AI-driven quant hedge fund High Flyer. The company develops AI models that are open source, meaning the developer community at large can inspect and improve the software. Its mobile app surged to the top of the iPhone download charts in the US after its release in early January. The app distinguishes itself from other chatbots like OpenAI ChatGPT by articulating its reasoning before delivering a response to a prompt. It's kind of interesting, isn't it? So it's got some reasoning skills here. The company claims its R1 release offers performance on par with OpenAI's latest and has granted license for individuals interested in developing chatbots using the technology to build on it. How does it compare to OpenAI or Meta AI? Though not fully detailed by the company, the cost of training and developing DeepSeek's models appear to be only a fraction of what's required for OpenAI or Meta Platform's best products. Always comes down to the almighty dollar, doesn't it? The cost, fraction of what's required. The much better efficiency of the model puts into question the need for vast expenditures of capital to acquire the latest and most powerful AI accelerators from the likes of NVIDIA. NVIDIA is taking it on the chin today. That also amplifies attention on U.S. export curbs of such advanced semiconductors to China, which were intended to prevent a breakthrough of the sort that DeepSeek appears to represent. DeepSeek says R1 is near or better than rival models in several leading benchmarks, such as AIME 2024 for mathematical tasks, MMLU for general knowledge, and Alpaca Eval 2.0 for question and answer performance. It also ranks among the top performers on a UC Berkeley affiliated leadership board called Chatbot Arena. What's raising alarm in the US? Washington has banned the export of high-end technologies like GPU semiconductors to China in a bid to stall the country's advances in AI. The key frontier, like that's really going to do it, right? It's almost laughable. The key frontier in the US-China contest for tech supremacy. But DeepSeek's progress suggests Chinese AI engineers have worked their way around the restrictions. Imagine that. Focusing on greater efficiency with limited resources. While it remains unclear how much advanced AI training hardware DeepSeek has had access to, the company's demonstrated enough to suggest the trade restrictions have not been entirely effective in stymieing China's progress. So anyway, it just goes on, talks about the founder. It's just interesting. I just find this very interesting how this derailed an entire industry of companies that trade on the NASDAQ, that trade on some on the New York Stock Exchange. It's just fascinating to me. So I think, as we've always said, it's good to have a portfolio that is a bit diversified into other sectors. So, you know, it wouldn't hurt to take a look at some Dow Jones Industrial Average companies, 30 of the biggest, largest companies out there that are conglomerates, global conglomerates, just absolutely crushing it. Clearly, there is a shift to more safer companies, right? There's the big sell-off in these high-fluting, high-flying technology stocks and into a safer company. So we have, if you go to our pick stocks feature, by the way, we have incorporated, I think I've talked about this in the portfolio assistant, those three distinct areas: base, growth, and accelerate. Well, we're launching an entirely new aspect of the portfolio assistant, and that is in alignment with sectors and indexes. So we recognize like which percentage of, let's say, for example, the Dow Jones, what percent are in certain sectors, and then you're going to be able to mirror that within your own portfolio. So you know, you might not know that the NASDAQ, for example, is 25% technology, 13% in healthcare, biotech, you know, these high-flying companies. And if you don't have any representation in your portfolio in those sectors, you won't perform as well as the index. So one of our amazing long-term subscribers, Brad, thanks, buddy, for bringing this to our attention. And, you know, he and I were talking about it, and it's like, yeah, really good point. We need to give you additional direction on as you build your portfolio to make sure that you've got it diversified among the sectors that will give you not only the greatest rate of return, but similar returns, hopefully better than the indexes, but at least on target with that. So that is what we're going to be launching this week. So keep your eyes out for that. And I just want to give a welcome to all of our new subscribers. It's really good to see you all here. We're loving the interaction that you've got going on when you head over to the stock forum. You know, keep posting, please. I really enjoy your comments and asking the questions that you're asking. Stock posts as well. We've got some new folks in here, so yeah, good to see you all here, and continue to stay connected with us so that we can build you the best program and software possible. So thank you so much to our new subscribers, but also to our original subscribers. Some of you have been with us since the very, very beginning. We're so grateful to you. You know who you are. So thanks for hanging in there with us and going through all the iterations in our software, and we continue every day to show up and make this the best product out there for you. So thanks again for your support. Hope you have a great week, y'all, and I'll see you next